So, over the years, the Government of Canada has introduced various tax advantaged accounts for Canadians to take advantage of. There was the RSP, which was introduced in 1957, and the TFSA, which was introduced in 2009. And now it seems in the year 2023, we may get a new one, and it's called the First Home Savings Account. And this was introduced as part of the 2022 budget, as part of a broad set of measures to combat the current housing affordability crisis that Canadians are facing. And some of the other measures that they're deciding to implement is number one, doubling the first time homebuyers tax credit, which doesn't really do a whole lot because that's at most a $1,500 non refundable tax credit. But, I guess it's nice to see that they're thinking about us. Also, introducing a 2-year ban on foreign purchases of residential homes, which it'll be interesting to see what impact that has, and also, of course, increasing the production of new homes through various initiatives as they can provide some details here. There's the Rapid Housing Initiative, which is being renewed for a potential third round, and also the Affordable Housing Innovation Fund. Now, these aren't expected to drastically change Canada's housing market, but they are expected to add some housing units, specifically in lower income areas. So it's good to see that these types of issues are being addressed. Now, according to the CMHC, Canada needs to build 3.5 million new housing units by the year 2030 to solve the current affordability issue. So, that many new units are needed to both address the increase in population that we're expecting to see in Canada from immigration, which immigration is expected to add around 400 to 500,000 new immigrants to the country each year in the coming years, and also to alleviate the current affordability gap. And also, two-thirds of those units, so two-thirds of the 3.5 million housing units, are needed to go towards British Columbia and Ontario. So this plan is quite ambitious given that if we look at what housing completions have been historically, so what we're looking at here is quarterly data from Statistics Canada, and we can look at housing completions right here and the total units, and we can kind of see through this line it's averaged between 50,000 and 60,000 per quarter. So if we assume 50,000 per quarter for each of the next 7 years, then that is only 1.4 million new housing completions. So that's about 2 million shy, right? So that's not really going to cut it. And in a world where we're currently facing labor shortages in many of the skilled trades and also supply chain bottlenecks, making it difficult to acquire raw materials that you actually need to build these houses, then, this goal that the CMHC is saying that we have to reach seems like it's going to be a bit of a challenge. Now, another commitment that's been made was by the Ontario government, and the Ontario government made a commitment to build 1.5 million new homes over the next decade. And one of the ways they're doing that is by opening up certain parts of the green belt to build homes on, which was a decision that, as you'd expect, was met with a lot of opposition, and environmental advocacy groups even called for the Ontario police to investigate the provincial government because there were instances of pretty prominent developers that were purchasing this land on the greenbelt to, eventually develop and build homes on before the official announcement was made that this land was going to be opened up. So obviously that caused a lot of suspicion, and they're calling for action be taken on that front. Now, politics aside, the reality is that affordable housing already exists in Canada and in Ontario specifically, but there's a reason it's affordable, right? It's because in those areas, no one wants to live there and there are no jobs there really. And jobs in Canada, specifically higher paying knowledge based jobs, are hyper focused in a few key metropolitan areas, such as the Greater Toronto area down here, the Greater Vancouver area. And that is where the inflated housing and rental prices exist. And people keep paying those prices because they don't really have a choice, right? They need to live somewhere close to work because sometimes now, with the economy opening up and remote work not being as prominent as it once was, people are going back into the office. They can't afford to live 300 kilometers away from where their office is located. So these are structural issues that the government can't just magically fix in 1 year, right? And there isn't really anything to suggest that building on the green belt specifically would alleviate any of this because there is still a plethora of undeveloped land in Ontario that could be used without having to tap into the green belt. Now, in the year 2022 and 2023, home prices are actually coming down, as we can see here in the latest data released by the Canadian Real Estate Association. Throughout 2022, home prices came down quite significantly and erased a lot of the gains that occurred in the year prior. Now, of course, the reason why this is happening is because of the rising interest rates that the Bank of Canada has been introducing as a means of combating the very high inflation that we've been having. As we can see in this chart here, at the start of 2022, rates were pretty much at zero, and currently they stand at 4.25%. So that is a very fast and a very significant rate increase. But the problem with this is it doesn't exactly help affordability. Even though prices are going down, the cost to finance and purchase is now much higher to the point where people who did purchase a house, say in the last year with a variable rate mortgage that has fixed monthly payments, they could see their monthly payments close to double once their mortgage is up for renewal, or even sooner if that trigger rate gets hit, right? Which is where the fixed monthly payments are not even covering the interest alone, and interest is becoming capitalized, as they call it, which means that interest is just being added to the principal balance of the mortgage. So what the government is trying to do now is to make housing more affordable by making these higher prices more accessible and giving them a way to save for the down payment of an eventual purchase of a home without having to pay taxes along the way. Okay, so now let's talk about the first home savings account. So it was proposed as part of the 2022 federal budget, and it could become a real thing sometime in 2023. And it kind of combines the best of both worlds of an RSP and a TFSA, where your contributions to an FHSA are tax deductible, just like an RSP, but your withdrawals from this account are not subject to any tax, similar to what it's like with a TFSA if it's used for the purchase of a qualifying property. So you can contribute money to this account, save tax along the way, along your path to eventually being able to save up for a home, and also any investment income, so capital gains, interest, dividends that you earn within this account are not going to be subject to tax when you withdraw it, if of course it's used for the purchase of a what they call a qualifying home. So the only catch is that once the money is in this account, it has to be used for the purchase of a house. So in the future, if you decide that you don't want to use it for the purchase of a house and or maybe you decide to move to another country or maybe you just decide to not purchase a house for whatever reason, then your options are to transfer it to another account like an RRSP, which would then make it subject to tax if you do decide to withdraw it. So you only get the benefits of withdrawing the money tax-free if you use it for specifically the purchase of a qualifying property. Now, the contribution limit is going to be set at $40,000 maximum, and there's an annual contribution limit of $8,000. So it's going to take a few years for the account balance to accrue. You do have to be at least 18 years old to open one, and once you do open one, you have 15 years to actually make your purchase of a house or until you turn 71 years old, whichever one comes first. And if you don't make a qualifying home purchase in that time, then the money gets transferred to an RSP or also an RIF. And in terms of what investments you can make in this account, it's pretty much the exact same as a TFSA, although I would imagine most people would keep a higher concentration of lower risk fixed income investments like bonds or GICs in this type account as opposed to equity or buying stock options or anything like that, because if you're trying to save money to use for the purchase of a house, especially if you're planning that purchase in the next say 5 to 10 years, you should have a higher allocation towards fixed income, and your priority should be keeping the principal balance intact, not just trying to maximize your returns by making very risky investments. And also considering that you have 15 years to actually make a qualified purchase of a home once you do open this account, I would say it's probably the smart thing to do. So speculating on tech stocks or buying out of the money call options in this account, probably not the best move in my opinion. And what's also interesting is they allow you to carry forward the tax deductibility of your contributions as far into the future as you'd like. So from a tax saving perspective, I think that's pretty interesting because say in the current year, your taxable income isn't as high as you think it might be in the future. You could not deduct your contributions and deduct them in the future to save even more tax. Again, this is not specifically tax advice, but these are just my initial thoughts from looking at this. So overall, I think this plan does a pretty good job at solving a very real problem that Canadians face when saving up for the down payment of a home, which is that once, say, your TFSA is maxed out, you've used up some of your RSP contribution room, where can you put your savings to earn a return that is tax-free? And there wasn't really anywhere, right? So unfortunately, you'd have to open up a non-registered account and pay taxes on investment income that you would earn on your savings along the way, which made saving for that eventual down payment much harder because you're paying 20 to 30% of your investment income out in taxes. So it's going to take longer to reach your eventual goal. So this account aims to fix that and alleviate some of those problems. So I think it does a pretty good job at that. Now, of course, there is also the home buyer's plan, right, which allows you to borrow money from your RSP to use for a home purchase. Now, the issue is obviously eventually if you did use that plan, you'd have to pay back the money to your RSP. And a small detail that is pretty important to keep in mind when looking at the FHSA is that you can't use the FHSA and the home buyer's plan for the same purchase of a home. You have to either pick one or the other. So it kind of shows that there's not really a whole lot of flexibility offered with this new plan. And once you do commit money to it, you have to be very sure that you're going to be buying a house in Canada in the next 10 to 15 years. And obviously, it has to be a house in Canada, right? It wouldn't really make much sense for this account to be available to foreign purchases of property. But let me know what you guys think of this account in the comment section below. Do you guys think that this will help solve Canada's affordability crisis in the housing area? Or do you think that an account like this is just going to exacerbate the problems just by making those higher prices more accessible to more people and just continuing to inflate the housing market along the way? I'd love to hear your guys' thoughts. And we'll see how this account plays out. We'll see how people actually end up using it and how many people actually make use of this account. Obviously, it does have some very interesting tax saving advantages to it. But that's pretty much it for this video, guys. So thank you so much for sticking around and listening. I hope you did find it useful. If you did, then please leave a like and subscribe if you're new to my channel. And I'll see you guys in the next video.